Hey guys, welcome back to my channel. Let's continue the part 2 of the previous video on are you financially ready to buy a house and what is your affordability. Let's take a look at the economic outlook. Along those same lines, there are years when real estate prices are depressed and years when they are abnormally high. If prices are so low that it's obvious you are getting a good deal, you can take that as a sign that it might be a good time to make your purchase. In a buyer's market, depressed prices increase the odds that time will work in your favor and cause your house to appreciate down the road. It's too soon to tell what will happen to home prices in the future. But if history repeats itself, we can expect a drop in home prices as a result of the COVID-19 pandemic and its dramatic impact on the economy. Interest rates, which play a large role in determining the size of a monthly mortgage payment, also have years when they are high and years when they are low. Obviously, lower is better. So, if interest rates are falling, it may be wise to wait before you buy. If they are rising, it makes sense to make your purchase sooner rather than later. Now let's take a look at the next point. Consider your lifestyle needs. While money is obviously an important consideration, there are other factors that could play a role in your timing. For example, is your need for extra space imminent? Is a new baby on the way? An elderly relative who can't live alone? Does the move involve your kids changing schools? If you will be selling a house in which you have lived for less than 2 years, would you incur capital gains tax? And if so, is it worth waiting to avoid the bite? You may love to cook with gourmet ingredients, take a weekend getaway every month, patronize the performing arts, or work out with a personal trainer. None of these habits are budget killers, but you might have to do without them once you have purchased a house. Before you practice making mortgage payments, give yourself a little financial elbow room by subtracting the cost of your most expensive hobby or activity from the payment you calculated. If the balance isn't enough to buy the house of your dreams, you may have to cut back on your fun and games, or start thinking of a less expensive house as your dream home. Now, what about selling one house, buying another? If you're selling a house and plan to buy another, save the proceeds from your current house in a savings account. Determine whether or not, after factoring in other necessary expenses such as your car payments or health insurance, you'll be able to afford the mortgage. It's also important to remember that additional funds will have to be allocated for maintenance and utilities. These costs will undoubtedly be higher for larger homes. When you calculate, use your current income and don't assume you'll be making more money down the road. Raises don't always happen and careers change. If you base the amount of house you buy on future income, you might as well set up a romantic dinner with your credit cards, as you will end up in a long-lasting relationship with them. However, if you can handle these extra house costs without extra credit card debt, you can afford to buy a house as long as you have saved up enough money for your down payment. Now, the next point, do you plan to stay put? Affordability should be the number one thing you look for in purchasing a house, but it's also best to know how long you are going to want to live there. If not, you could stuck in a house you can't afford in a city or town you are ready to leave. Many financial experts suggest living in a house for 5 years before selling it as a guideline. Don't forget to factor in the costs involved with buying, selling, and moving. Also, consider the break-even point for the mortgage fees associated with the house you are selling. If you can't decide what city or town you are going to live in and what your 5-year plan is, it may not be the right time to buy a house. If you want to buy a home without a 5-year plan, purchase one that is priced much lower than the maximum you can afford. You will have to be able to afford to take a hit if you have to sell it quickly. So, are you ready to buy a house? In short, yes, if you can afford to do it. But afford isn't as simple as what's in your bank account right now. A host of other financial and lifestyle considerations should figure into your calculations. When you factor in all these elements, your affordability starts looking more complicated than it first appears to be. But considering them now can prevent costly mistakes and financial problems later. Of course, when you find the perfect house in the perfect place for sale at a perfect price, go for it. Let me know your thoughts on this in the comment section below. Don't forget to subscribe, hit that notification bell, give the video a like and share it with your friends and family. Thank you very much for tuning in, and I will see you in the next one.